What is going on, guys, and welcome on into today's stream. A massive day when it comes to the start of some big tech earnings. We have a big time report coming out later on today, which will be from Microsoft and Google. Okay, and we also got Enphase, Visa. There's some other ones there which we can take a look at too, but two big names, Microsoft and Alphabet, two massive weights across tech, across the NASDAQ, QQQ, and then across the S&P 500. So this is going to be a massive market mover. But in the meantime, what we're looking at right now is a pretty strong day. SPY is up as we speak about 1.25%. I recently adjusted this. Let me see if I can make this a little bit larger so you guys can kind of see. Okay, cool. I recently adjusted this just so that I have like a nice... I just organized my watch list and everything on TradingView to make it better. Small caps, futures, more future stuff, risk on names, which, by the way, look at the risk on names. And it's a little tough to see, but you guys can pretty much see it's all green, number one. And number two, they're up a lot. Shopify's only up 3%. That's the lower end. Meta's up 6% almost. Affirm's up 13. Snapchat's up 14. Rivian's up 10. Mara's up 14. Crypto miners. I mean, pretty nutty day across risk on. Now, if you look across large caps, I don't have all, I just have a couple large caps that I generally like to follow, but there's of course there's a million more out there. Tesla's up about 5%, Apple about 1.5%, Nvidia's up about 5%, AMD's up 5%, so semis are doing pretty well today. Amazon up 0.3%, Microsoft 0.8%, and Google's about 1%. So what you kind of see is that across some of the large caps, it's not as strong of a day. Especially across the names that have earnings this week and the names that have earnings today. Microsoft, Google, and Amazon all underperforming the S&P for now, at least for today. We'll see if that continues. So we got about an hour and 15 minutes until we get some of those earnings to jump on in, and we'll see how the next at least the next hour or so goes until that span of time. But a pretty strong day. SPY never really came back down all the way to view up, but pretty much higher lows. We ripped off the morning off the open. I was kind of interested to see how this would play out. I thought we would see more of a move in pre-market. We didn't really see a crazy move. We were actually kind of flat. We were down actually early in pre-market, and then we kind of came back to flat in pre-market today. Because the reason why was because we were already starting to see DXY, the dollar, breaking down, right? This is breaking down. So that was a big player, or at least a big part of what we're seeing right now. By the way, on the dollar, let's look at we're on the 5-minute chart. We're kind of in this like bear flag mode right here, where we are after a big move down. Right now, we are kind of flagging, consolidating, and it looks like it could be setting up for the next leg down at some point, this week, depending on how long this consolidation lasts. Zoom out a little bit more. Go to auto. Here we go. So yeah, here's the bigger trend. I go to the past couple months. You can see that this trend really began in August, and it makes sense. What did we see from July through mid-August, right? July through mid-August, the dollar actually was trending down, right? Ever since mid-August, when we put in that short-term top across the S&P, what was the dollar doing? It's been going up, and higher lows, higher lows, higher lows, man. It's just like keeps on going. And then if you go back to even October 5th, what happened on October 5th? DXY had a decent pullback off the highs, and on October 5th, we had a decent rally across the markets. That's actually, we bounced up a good bit early that week, a couple weeks ago. So DXY and the 10-year are kind of playing, not hand in hand, but to some degree, they both have been on extremely strong uptrends since around the same time in August, and are starting to show some weakness. Now, DXY is breaking a bigger picture trend line from that point. More notable, 10-year hasn't really done that yet. Under 4%, and we start to get that door open a little more, or crack that door open a little more. But at least it broke down off of the highs, lower highs so far here the past couple of days on the 10-year. So we'll see if that continues. It hasn't been. Bigger picture, zoom out weeks, months, but at least in the short term, that's kind of driving some short-term price action for now. And then I think earnings will have the next big impact on this next thing. So we'll see. In terms of other earnings, 3M, we can take a look at some of these guys. Let's see the reactions though across the market. I'm actually kind of curious because at the end of the day, when it comes down to is what is the reaction in the market, right? So Coke, I believe I saw this earlier today, after the earnings, which they did beat, apparently. Let's just double check on these numbers. So Coke comes in, let's see, they reported a 0.69 EPS, and the estimate was 0.637, so they beat there. Revenue, they reported 11 billion in revenue. The estimate was 10.5, so they also beat on revenue. So they beat on both, which was a good sign. And then we gapped up. Well, off the earnings, we kind of popped up, and then we kind of gave a decent chunk of that back early in the day. And then since then, we kind of built a higher low, filled the gap back down pretty much because we came back to pretty much where we closed yesterday, filled that gap back down, and then have bounced off of that level and began that, move right back on up. And it's actually getting back up to levels we haven't seen since pre-market off the earnings. Daily chart for for Coca-Cola, massive move. Jeez, that doesn't look super healthy if you ask me, but massive move off of those lows that we saw just a couple weeks back. You're coming up into a spot, maybe there's going to be something here around this 59 area. It was kind of an interesting inflection point back in here. We were trying to consolidate, hold this level, and then fell back below. So this 59 to 59.50 area will be the next spot, at least just looking at the big picture chart that I have in mind, but not huge. There's a gap down. There's a gap to fill back to the downside, down to about $56 from 2 days ago. You need to market a pullback pretty substantially to get that gap fill, at least right now in the short term. So that's something to keep in mind. This gap down here from like 56.60 down to about 56.10 or so is the area. So we'll see if that ends up, if we get a back test, that could be a spot to look at for support, bounce. Let's see, 3M. Let's take a look at this earnings report. What do we get here? We got an EPS came in. EPS beat by 9 cents. Looks like revenue came in a little bit lower. So revenue missed, but EPS was a beat. And the reaction is that it's down off of that number. But look where it came down to on the daily chart. Right in line with the lows of the past, week and a half. Right there. So really good demand zone, really good support at around this 113 on 3M. And it's bounced right back up to pretty much yesterday's area. So until that breaks down, that's your level. So about 112, 113 is your spot to keep in mind for 3M. Could get a lot more upside here. I mean, this could probably, this got some range. It could easily get up to this area right here. That was a prior area of support, turn resistance, up to like 125, 127, 125, 125 to 127 is like the next key, area, just big picture chart wise. At least from the looks of it. But yeah, UPS. Let's look at UPS. So FedEx had the earnings, or not earnings, they at least had guidance or whatever they had a while back. They had some scares in the market at least. UPS is funny because look at this. UPS comes in with a beat across EPS. They beat by, looks like 15 cents almost. And then they also beat on revenue by about almost 300 million. Nothing crazy percentage-wise. It's small beats, but they beat there on those two numbers. And then at least gapped up and then have given it all back. So it looks pretty weak if you ask me on UPS. This probably has a look of filling the gap that we had from last Friday into Monday. Look at this. This is a spot right here. Now, of course, no guarantees it happens tomorrow or whatever. If the market rips hard tomorrow off these earnings today, good chance that this might actually kind of bounce from here. But this is a small little gap to fill back to about 166, so not that far off from where it's at now. But it's possible that we come down to that area, find support, and then see what happens from there. But that's at least the spot on UPS. Some gaps up to the upside if it does get momentum back up over this 180. You got a gap to fill up to about 185, 184.50. So those are some levels to keep in mind. But it's funny to see that, so far across all three of those stocks, they all beat, right? They beat across everything except 3M missed on revenue barely. So funny. If we get something similar, and of course, guidance is different than beating, and we just looked at the numbers. I'm not looking deeper into the other stuff right now, but that's at least what we got based off the numbers. Guidance wise, and what is said on earnings calls and stuff could be completely different and can change the sentiment very, very fast. But for now, that's what we got. Let's see. What do we got here? This is SPY. So SPY pretty much popped back up. Let's just take a look at this. It's kind of an interesting spot on SPY because now what you want to see, if you want to pull back into the close, which I think is a possibility, obviously we can just keep going higher. But my concern about if you were to play that higher is if there's some skepticism behind, what the heck's going to happen on these earnings. My guess is that there would be some selling. I would think you'd want to be looking to take some profits today because of what you don't know what's going to happen in literally an hour and 15 minutes. Could be completely the opposite. So this would be a potential spot if we can't regain 384 on SPY. If we start to kind of bleed out, we could fall off, $1 or $2, or at least another $1 into the close, something like that. Nothing crazy. Not expecting a huge move. We're probably just going to slowly consolidate for a bit. But that's the look. Let's see. What's going on, guys? Smash to the 50-day. We got to be getting close, right? On the 50-day? Oh, yeah, I took them off my chart let's just see. Yeah, we're close. We are very close. 385, 386 area is that 50 moving average. Yeah, 386 on the nose is that 50-day. So that's going to be, obviously tonight's test / tomorrow if we get that. But yeah, I mean, you can see yesterday was funny because yesterday, even though the market was up a good bit, yesterday was not that strong of a day across like the risk on stocks. And it's good. I organized this watch list a lot better so I can kind of get a better view of that. So you can see the large caps, everything's green today. Obviously everything's up for the most part. But in terms of the risk on, it's clear outperformance here. Now, obviously there's individual risk on names that are doing better than others, but it's clear outperformance here. Bitcoin, I believe, is doing pretty well. Yeah, up 5% on Bitcoin. Look at natural gas, up 7.5%. So look at natural gas. So we got that big move down. Now what you want to see, we're talking about natural gas like 2 weeks ago almost, it feels like. Then we talked about it last week as well. So you had 5 red days in a row on natural gas. Literally last week, every single day was down. Now natural gas is having a nice bounce. Not surprised. Why? Because it's coming down or a bounce at the exact same spot that we saw natural gas bounce at back in June. So pretty, straightforward stuff. Nothing crazy, really. Not like a crazy, oh my gosh, I didn't think it was going to bounce there, right? We talked about that. It obviously could flush through, but it's bouncing. Now, nat gas established a really nice consolidation from like 655 up to about 715. If this trend to the downside is to continue, what you'd want to see is now as natural gas starts to kind of inch up towards that 650 area. So we're at 613. So it's still got to go about 35 cents or so to get there. As it inches back up, and it may not actually get there. If we start to see natural gas reject, that could be, maybe a possible entry for a short side trade if it rejects, and then your risk is pretty simple. Like I would say like 655 or 660, something like that is a decent risk. Oil not as strong today. Natural gas doing a lot better. Oil is kind of just not moving much the past like week. Oil has been in this range from like 82.50 up to about like 86, which is a decent range, but it's been pretty consistently in that range this entire like past a week or so. So something to keep on the radar, I guess. But yeah, 20-year yields. But where is TLT today? TLT, let's see. TLT's up 2.5%. Yeah, it gapped up. TLT at least. It's just flagging. It's just flagging pretty much. So yeah, we're getting some movement there. I'm not really worried about the TLT or the TMF. It's just, for me, it's again. I also look at this. Look at this. If we take a look at some of this economic data that we had from today. By the way, this is going to be the underlying story that not many people are going to be talking about, but it's actually pretty important to look at. So PMI, I don't know why these numbers didn't come in or why they're not showing up, but whatever. That was yesterday. I'm sure you can look them up on Twitter and just do a quick Google search and you'll have the numbers. We can even do that in a second too. Case-Shiller Home Price Index, and then the U.S. FHFA Home Price Index, whatever. Both coming in worse than expected. And the Case-Shiller way worse than expected. And the other one came in just underneath the previous. So the previous numbers. So coming in at least accelerating to the downside in terms of home prices, which is not surprising, but that's another one of those indicators we have to look at. Consumer confidence lower than expected, and lower than last reading as well. So we'll keep this in mind. Now, new home sales is tomorrow, but I think Thursday is a bigger day. Jobless claims and GDP. Not that I think GDP is going to matter that much, because all projections point to this being a positive number, which means that technically we would be out of a recession if really okay, sure, fine. But that would be the positive number on that GDP. And then, next year is where I think that we'll actually start to see, more substantial and more consistent negative readings on that GDP reading. Jobless claims is tomorrow morning, and that's going to be really important. And then PCE, price index, and core PCE on Friday. So those are some big days, believe it or not, that will be market moving types of data readings. Consumer spending, disposable income, like all these numbers are going to be really interesting to see on Friday. So the plan is to do lives every power hour this week. So we'll cover all this stuff and see how it all comes in, as well as the earnings like we've been doing. But that's the plan. So we shall see. Wingstop earnings come out tomorrow, making me hungry for some Wingstop. Let's take a look at that chart. Let's take a look at Wing, because we looked at it a couple weeks back, I think. Let's take a look at the daily on this guy. Oh, yeah, pretty strong, too. I mean, look at that. Pretty strong. I mean, market's up. Everything's up today. It's up 5%. Pretty strong movement. We got to kind of almost have this, like, massive flag. You have this massive move up, and then you're just, like, in this, like, flag pattern the past, this is the past, like, 6 months or so. Well, almost 6 months. You go back to July. So it's a pretty big flag pattern you have going on there. So obviously almost has that, or it has that head and shoulders look too. So you need to invalidate that. You got to get above, well, this earnings will be really important. You got to get above this like 142. Above 142 on Wingstop invalidates this head and shoulders and probably sends you back up darn close to the highs that we saw back in 2021, believe it or not, which is pretty crazy how well this stock has done. Really just since the summer. It had that really good rally from June through August, and then it's essentially held it, which is kind of cool. Lemon pepper. That's my go-to when it comes down. I'm definitely more of a buffalo kind of guy, but like if I'm not going to get like a buffalo wing, like it's going to be lem pep. That's what I get. It's good stuff. Can't really mess up a lemon pepper either, you know what I mean? Like it's pretty tough to do, unless the wings are just, crappy, but for the most part, you can mess up because there's all different types of buffalo sauce, barbecue sauce. Like you can make it kind of taste. You can kind of ruin it, but lemon pepper, you can't really screw that up. It's pretty straightforward and it's good stuff. So yeah, a ton of strength there. We'll see if that continues off through the earnings, but that's the look on this guy. What else was I looking at today? I was looking at a couple other things. Oh yeah, put call ratios. Put calls have actually kind of sneakily sneaked back up a little bit this afternoon. Look at this, but without, many realizing. And I think it's not a bad idea. This could just be hedges because think about it, right? We open up this morning, market starts ripping, everyone's buying calls, whatever. And this isn't like a great day-to-day indicator to say, oh my gosh, we must go down or up tomorrow based off this. But no, it's just interesting data to look at. And ever since then, the ratio, we've been seeing a lot more puts being bought relative to this morning where we were sitting at. So that ratio has been kind of sneaking back up, which is interesting, but also not surprising as I think about it because you got some earnings. You get a big, strong day. People are still in that mindset of fake out, like no way this is going to hold. And I believe also at the same time, hedges. Like, oh, we had a big move up. I'm going to hedge in case this move up gets erased off of earnings and it was a little fake out, So I don't think it's a terrible idea, for those who are doing that. But I still have that one like put hedge in my Robinhood, which is essentially worthless now. Yeah, it's like 20. It's at 20 cents. I think I bought it like $1 or something. It's at now worth 20 cents. But it expires on Friday, and it's going to just essentially be. I'll hold it until at least Wednesday, at least tomorrow, because if we have a really strong day tomorrow after these earnings, then essentially there's no way that put's going to even come back. So I'll sell it for even just a few bucks, salvage like $5-10, whatever it is, off of that. But that's the plan on that guy. But yeah, check out the Robinhood today. Let's see how this is doing. The Robinhood portfolio is up about 5%, 5.5%. I have a bunch of these calls covered calls that I'm trying to sell across essentially every position that I have, but I pretty much am being a little bit, I'm not being like super stingy, but I'm kind of being like, I'm not trying to be too aggressive. So I'm selling like far out the monies. And if someone takes the bait today, great, take it, right? But if no one takes the bait, okay, I'll just, tomorrow do the same thing, wake up or whatever, do the same thing and see if someone takes the bait. And especially if the market goes higher, that's even better because if the market goes higher, then I can probably get a better, price or whatever for some of these covered calls. So we'll see. But that's where that's at Uh, Everything's up there today. I know you can't see. Let me just get myself out of the way so you guys can see what I'm looking at. But yeah, I mean, we have Labu's up 8%, Soxel 6.5%, TMF up 6, almost 7%, Jeppy's up 0.7. Should be getting a dividend there in the next like 2 weeks. AGQ's up about 2%. Is that at my average yet? I wonder if I'm up or down on this. I'm actually still technically down from my average on this thing. Whatever. I did sell a covered call originally on this guy. So I'm kind of not surprised. Well, so the technically, made a few extra bucks off the average, or its average is a little bit better, but whatever. We're going to still be long in that until told to get out by the charts. That's essentially how I'm playing it. Ethereum's up a lot. I have like 16 cents of Ethereum that I physically couldn't sell because it's like too little of amount to sell. I guess I didn't sell the full amount last time I sold it. That's what I have there. But outside of that, that's really it. It's the TQQ put, and then I have this. Oh yeah, the AGQ calls. I have 3 of those. I bought 2 yesterday. I bought 1 more today at a 50-cent average for next month. Why? Because we had those and we're looking at that and we're saying, if this dollar breaks down, in theory, we'd be thinking that gold and silver will do well. And they've done decent. Silver's actually up about 0.8 today. The charts don't look too bad. It's pretty constructive, higher lows are, nice, a clear demand zone. Clear support zone for now until broken. If this zone breaks, you got to pray a big move coming down, if it breaks. But until proven that, you can't assume it's going to break, at least in the short term. So that's what we're looking at there. I'm looking for this thing to get back to 20 plus, ideally. And so that's an update across there. Nothing I'm doing other than just trying to sell covered calls on green days like today, if I can get a decent price. And I'm not expecting too much, although I think that this rally could certainly extend, especially if we get past this week and we keep seeing some green after these earnings right out of the way. This rally can certainly extend just like we saw back last earnings, late July into early August. We kept going for like another 2-3 weeks until we hit that top in August. So at a minimum, I think we have, potentially up into the Fed, which is November 2nd, which, by the way, let's pull that up and see what I don't expect any changes really here to the Fed's projections. Yeah, 95% chance of a 75. It's kind of in this like 90 to like 98% chance, like oscillating around in that level. But that's essentially what we're expecting for the next hike, November 2nd by Mr. Powell. Nothing crazy, but that's probably the next, I would say, after this earnings week. That's technically next week, I guess. So it's not that far off. It's still a little bit over a week away, about 8 days away. So it's next. I'm assuming it's next Wednesday. About a little over a week away. So you might get a decent push up until then, and then depending on what he says then, that's going to give you the next key. It's either going to be massive opportunity, or we're going to have, there's going to be massive opportunity, I think, both ways. Either it's going to be continued rally until, what they don't want, or how is Powell going to sound in this meeting? Because it seems like, especially if that Wall Street Journal article has some legs to it from last Friday, that pretty much kind of saved the market on a technical perspective. If we look back to what happened there on SPY, it wasn't looking good last Friday morning. And then if you jump back, this is what it was. Here it was right here. Wasn't looking good. We're ready to gap down and open up low, and who knows what would happen that day. But that article comes out, and it's pretty much out here saying like the Fed, is now contemplating, slowing down hikes / pausing hikes because they don't want to do too much damage right now, blah, blah, blah. And the market's going to take that, and it's going to run with it no matter what. I think doesn't matter if that's in reality not a good thing, because in reality, if the Fed's saying that, that means that they're noticing something. There's some concern there that they're going to be causing too much damage, right? They're not going to say it. They're not going to say it out loud because they don't want to admit that they're wrong. And just like inflation was transitory, and just like this hiking cycle right now is, much needs to be done. Inflation is it's too high. It needs to come down. Just like that, you might see the backside of that next year, like we've been talking about. And I think that would be the Fed starting to catch on to that if Powell starts talking dovish in any way, next week's meeting. Now, it's going to be interesting to see how he walks that line and if he lets on to any of that and the questions that he gets, because I'm sure reporters are ready to grill him and ask blatant, questions like, what's up with this Wall Street, Journal article? who slash how many people, not who, they're not going to say who, but how many members, right, are maybe supportive of slowing down or pausing. And he's probably going to get some questions like that next week, and it's going to be interesting to see how he answers them. So like always, we'll do a live for that too. That's the plan next week. So, whew. Yeah, that's it. That's the deal. So we got IWM, massive outperformance today, by the way. So small caps substantially stronger than the S&P. IWM was up at one point a little over 3%. Now it's up about 2.75, whereas QQQ is up just under 2, and then the S&P is up about 1.4. That was kind of the opposite yesterday. Yesterday was actually the S&P was strongest, I believe, and then everything else was weaker. So we've been kind of looking at these correlations, and in a volatile week like this, I'm not surprised that they're flipping on a dime. So it's a little bit more choppy in terms of trying to understand correlations, but at least for all you need to know, sometimes it's intraday, or at least or right now, small caps today are stronger than large for now. Gas coming down again. Let's take a look at that. I haven't looked at that in a little bit. Let's take a look. Let's see. Gasprices.aaa.com. What do we got? Current average of 377.5. Yesterday, that's down about 2 cents from yesterday. It's down about 10 cents from a week ago. So that's good stuff to see, right? A year ago. Wow, is it really been that long? Jeez. I guess gas peaked. I guess gas peaked at $5. So a year ago, being 338 is still relatively low compared to the peak it was. But we're getting close to that point, which is kind of crazy. Think about that. Gas prices back to about like 40 cents away from what it was a year ago. Okay, so in terms of, in terms of looking at the big names that have earnings today, let's go check them out. So Google, Microsoft. Microsoft, by the way, is teetering on. I didn't realize this is, I was looking at playing this in the small account today. I drew this level in, and I didn't actually play it because why? Because I'm not playing contracts on Microsoft this week for options right now. They're juiced up out of their mind. They got an earnings report. So next week maybe, but not right now. But getting clear resistance here at this 250. Very, very clear. So we've had a couple opportunities of rejections there today. I guess I can get rid of this. But very clear resistance at that 250 on Microsoft. So we'll see if it ends up finishing the day right there, or if there's any push in the next 45 minutes into the close. But that's Microsoft. Let's see the earnings projections. They're estimating an EPS of 2.31 and $2.31, and then revenue estimate of around $49.663 billion. Google, wow, look at Google. Boom. Look at that. Google just ripped a new high of the day there, just the past like 10, 20 minutes. Google right here is projecting a 126 EPS and a $71 billion revenue handle. So that's just some numbers. Of course, does that mean that because they beat or they miss, the stock has to go up or down? Not necessarily. Off of a big miss or a big beat, you're going to get algorithms. So, I mean, you guys already know, but algorithms control like 80% of the market anyway, especially in 2022. So they're going to see that headline and they're going to be boom, buy, sell. They're going to know, okay, buy or sell right away. And that's going to trigger a pretty big move immediately after the earnings comes out. And then, from there, we'll get a better sense of direction. But we shall see. Home prices continue to lose momentum in August. Yeah, no. I mean, if you look back, we're looking at this data, and we're going to get some, what's tomorrow? We're going to get some new home sales tomorrow. I'm going to be really interested to see that number, which, by the way, came in at about 685,000 last time. The forecast is for about almost 100,000 home cut for this report. We'll see if that number comes in higher or lower, but based off of Case-Shiller and the other home price index numbers we got this morning, which are down more or which are down pretty substantially compared to the previous month, we'll see if this number comes in lower than was expected or not. I would guess, if I was going to guess, I'd say lower, but I'm not going to. I mean, I'm sure there's some ways to trade that. But we talked about, remember how a long time ago we were talking about on the the 3X ETFs for the real estate sector, DRV. It's looking back, it's not the best. It's not the best way to short real estate. It's down today, and look, oh wow, look at that massive downside. By the way, this chart doesn't look bullish at all, at least right now, because what you had was an inverse head and shoulders. It's a 3X. This is a 3X ETF, so it's like super leveraged up. It's like, okay, it's risky if you want to be in this thing. But look at that. Here's the concern, right? If you were in this / if you are in this or looking to short real estate with some of these 3X ETFs, be very careful right now, because market rallying, these are not going to do well. They could go up. It doesn't matter. The market doesn't have to go down for these to go up. But generally speaking, market going up and rates going down, 10-year, 30-year, 2-year, if yields are going down and the market's going up, that is a recipe for an annihilation of DRV, right? This is going to get slaughtered fast. So just be careful of that. I mean, again, you had a massive move off of where it was in August. You could have, on mid-August, right, when the market was peaking out, you could have bought this thing sub $35 and it went to hitting highs of 85. Now, of course, you don't have to, no one's going to have the whole move. But if you had taken this thing, let's say somewhere under $40 and sold it somewhere over 60, you made a killing. Like that's beautiful. So it's all about the perspective now. And this very well, if DRV ends up, sub $40 again, that's something to start looking at maybe for next year, for a swing trade into next year. But right now is a good swing trade. If it's a swing trade right now, I would say it's a swing trade short. If anything, it doesn't look very good to the upside. But 3X ETFs obviously have that risk, so just be careful. But crazy move we've got on that thing over the past couple of months. Well, really past like 2 months, month and a half. IWM, let's take a look at how everything is setting up. Let's see. IWM at the 50 SMA. Yeah, right. It's peaking right at it. That's a really interesting spot. 179 roughly. Yeah. $3X Microsoft's there. I think there's I've been seeing more of those. I'm pretty sure there's a 3X Tesla. There's definitely some 3X, which is actually a really cool take on playing that. Let's just see. 3X Tesla ETF. Is this an option? Yeah, look at this. So they have, not for every stock, but they have them. So 3X long Tesla. They have one. What is 3X long? What is the ticker? Is it not going to give me a ticker? Listings and tickers on the London exchange. So you can trade it across in London and stuff. Interesting. But I mean, I'm sure that they have. I've seen a bunch of this stuff. I'm sure they have other ones. Also, like ARK. You look at ARK, you can trade ARK long or short 3X, I believe. TARK. And then there's SARK. It's kind of random. But, oh, yeah, ARK was another one today. Let's take a look at how ARK is doing. ARK Invest. Kathy Wood, what are we up to? Up 6.5%. So we're doing pretty well, right? Something's working. Jeez. Yeah. Look at that, Kathy. I mean, we had a decent flag setting up right here this morning, and then we've pulled back. And many times, you got to be careful. Sometimes this is like one of the most frustrating patterns. And of course, it happens. It doesn't always work out perfectly, where you break the downside of a flag. But if you have VWAP that's sitting like kind of close below, you got to be careful, because many times I've seen where you'll break the flag and then you'll bounce that VWAP, and then you'll ultimately go way higher. And it's like, oh shoot, how did I miss that? It doesn't matter, because you don't know what's going to happen next, right? You never know for sure. So it doesn't really matter, but it's always a possibility, especially when VWAP is pretty close behind and if the market was strong. So if you're watching SPY, you're watching how the market is reacting at the time. Like, it probably didn't surprise you that we ended up bouncing there, because the market stayed pretty strong and has been building higher lows pretty much all day. So their leverage, Apple. Okay, yeah. I mean, especially with Apple. With Apple is funny too. Is Apple at the moving average yet? The 50 moving average? It's got to be cutting close. It's over 150, which is a pretty big move. Apple's close. Apple's 50 SMA is like $1 higher. So Apple's very close. Look at this downtrend break here on Apple. Very nice move so far this past week on that. Do you think Fed pivot will come before or after real estate crash? I don't know if we're going to get necessarily a crash. I think we're kind of just going to see like this just bleed that intensifies maybe at times into next year. But I don't know if we're going to get a true crash. We'll see. But I would imagine that the Fed pivot won't be probably until at some point next year, because like a true pivot, I guess people think, oh, the Fed pivot is them, stopping. They can start to talk about a potential pivot, but them actually doing it, the markets are going to be pretty far ahead of that. So when the Fed actually like pivots, it goes from raising to cutting. That might not be for like till next year, if even next year. And the reason why I would say if is because if somehow we have a softer landing, then they're not going to need to pivot very soon, right? And they might not need to actually kind of swap sides. They might end up having rates go up, increase rates, and then flatline for a bit, hold them, see how we're reacting, and then if they say, hey, we got to start cutting here, we've got some problems, then start cutting. But that might not come for a while. However, if things start slashing down, if CPI starts slashing down, home prices are already plummeting, but if they continue to come down and they stay aggressive in terms of how fast they're coming down, all of this stuff is going to be potentially what sets you up for that Fed pivot sooner rather than what the Fed is saying or what we've projected. Now, it's an interesting case because you have the situation of like, well, you've been wrong this whole time, or those who've been calling for that have been wrong this whole time. Sure, but I think you're gonna have a situation where when the tide turns, it's probably going to turn pretty fast, and it's probably not going to be something the Fed can really counteract, right? If they really impact the job markets like some are predicting based off all these rate hikes, and they do another 75 and then a 50 after that, you're probably dealing with a situation into next year that it's not going to be easy to do some 25 or 50 basis point rate cuts to just all of a sudden, everything's back to normal and we're kind of, back into equilibrium. Like it's going to be the pendulum swinging one way, this way massively, and then it could swing right back. And so while the Fed might try to slow it down from going all the way up here and just destroying everything and job market going to complete, into the toilet and whatever, and real estate going down, 50%, like some crazy stuff, like before that, they're going to try to push it, but you're going to have essentially a massive, 1,000-pound bowling ball coming at you, and you're going to have like a couple members of the Fed sitting there that are, 200 pounds and try to push it back. I mean, that's essentially the analogy, right? So we'll see, how big and how fast that ball is coming, right at the Fed, but that's kind of the idea. So it's going to be a lot of either way, it's going to be a lot of fun like we say, but there will be volatility and there will be something, whether it's bonds, whether it's stocks, whether it's risk on, whether it's risk off, whether it's gold. It doesn't matter. There will be something to talk about. There will be movement. There will be big movement no matter what. So we're going to get it. And if that scenario does pan out, where let's say the market starts to price in a pivot / cut into next year, and the Fed ends up doing so, let's understand this too. It's not going to be a positive. Like in the short term, yes, it's probably they're doing that because they have no choice, and they have to do that because of some massive damages and some massive concerns that they have. In a perfect world, what they would like to do is ease you up into the rise of rates, keep it there for a while, flatline it, and then slowly bring it down eventually into an equilibrium and to kind of manage it from there. But if they have to start cutting earlier than what they originally projected, that's going to be sign. There's signs already. That's going to be big time sign number one at the moment that something potentially bad is lurking. Best two ETFs for ultra risk on: Bulls, TARK, TQ. Yeah, no, Bulls is another one. Let's take a look at Bulls. We looked at this one a while back too, and it's been funny to see. It bottomed out like $2 and it's up to $3. So that's been a nice like 50% bounce on Bulls. By the way, those massive bullish engulfings, end up panning out so far. So you look at the moving out. I mean, look at SPY. Let's go to SPY. Huge bullish engulfing day, right? Back here on last Thursday on CPI. Well, what we've seen, higher lows since. Boom. Those lows were never breached. Those lows were not breached. By the way, SPY had just hit a new high today. Just hit a new high. SGIM ETF that plays opposite of Kramer. That's funny. That is funny. So look at that. So SPY is essentially, if you're trying to short today, it's not the day to short. Oh yeah, today also, look at the small count. What do we have today? We had the biggest winning day ever on the small count today. All calls and 4 different stocks. So pretty nice. I mean, we had a play that was 80%. We had a smaller size. We had a play that was 18%. We had a play that was 40%, and then we had a 17. So some really nice stuff across the small account today. $82 on it, which is the account's been oscillating between a couple $100. So $82, right? Whatever, who cares? The dollar amount doesn't matter. It's the executions, and it was like, I would say, I don't know what it was this morning, but in about an hour of time, just dialed in and nailed all of them, which is kind of cool. And of course, the day before that wasn't great. So if you go back to, let's say, the day before. So the day before was down. We had 2 bad trades, or we had 1 bad trade. We had 1 winner and we had 1 loser. The problem was I played this SPY contract. It was honestly too volatile. And yesterday morning was a little bit interesting because you couldn't really get a good feel for the price action. At least I couldn't get a good feel for that. Today is a lot easier, right? Cleaner, more directionally based, big move up, consolidate, flagging for more, right? Pretty straightforward, If we had a big move down, it would have been the same thing. Big move down, consolidate, flagging for more downside. Those are the best days, at least the easiest days I find. Yesterday, this massive chop and volatility at the open was kind of crazy, and it really kind of extended for the first hour and a half of the day. And then it started to give us, slower, trendier price action, but it was pretty challenging that first hour and a half, which is also when I did take that play. So that's why yesterday was a little bit more of a pain, but today made up for it, I guess. And it made up for it in a lot, because when you have a down day of 40 and you come back with $82 day, and boom, you make it all back and more, right? That's what it's all about. Keeping the wins bigger than the losses. Great day for the smalls. Yeah, no, it's up. This month we're up. So pretty good month so far. I feel like I'm getting a much better feel for it. It's taken the time, and there's a lot of great lessons, which I'll kind of each month I try to synthesize, or I try to do two videos a month in the small account to dive into what's going on and what I'm doing, what I'm seeing, what's working, what's not working. But hopefully the synthesizing of all that stuff is really good, and you can kind of see it. Because coming from a swing trade approach, over the past couple of years to going to more of that day trade approach it's two different. It's not completely the same general concepts should apply, right? But it's two different worlds. It's completely different stuff. So it's not easy to it's like relearning what you've already learned for something else, but it's like relearning it. So focus on Microsoft. Yeah, let's take a look. Microsoft is breaking over. Now the S&P is hitting new highs. So Microsoft is breaking over the high of this 250 today. So it's making a new high here. The reason why that was a key spot, I zoom out. Look at this. I had this level charted out at that 250. It was an area of resistance back here in early October. And it wasn't a perfect spot of support back in May and June. But we had a lot of wicks, a lot of days where we came down to that 250 and then bounced. And it generally speaking, and then especially because we had this, it's an area of interest, right? In my view. So even up to about 252, which is where the 50 moving average sits about $1 higher from where it's at. So 251.60. This is going to be a key spot. So we're at a key, we're at resistance right now on Microsoft. So this earnings is your catalyst, on a silver platter to tell us what we're going to do. Either we're going to reject super hard from here, or we're going to blast right through, and this resistance will now be our new support to look at in the coming days, if we even come back down to it. But we'll see. A lot of volume to grind through, though. A lot, right, in this range. From 250 up to about 267. There is a lot of consolidation, a lot of price action so far this year. We have a lot of shares exchanged in that range. So we'll keep that in mind as we're headed, if we're headed, further to the upside on Microsoft. Watch if we actually dumped a huge amount into that. Outperforming ARC. Yeah. No, yeah. No, it's fun. I definitely think it's fun. I've been messing around with the futures account a little bit. The problem with the futures account during the day, I don't think it's a good play from at least where it's at now. If I'm gonna fund it with more money, then maybe. But right now, being at like 100 and something bucks, it's not a good account to have during the day, especially with volatile moves. So you could be in even the micros, like you could be in something, and if you don't have a stop in place and you're not able to get out quick, you got to be careful, because a couple point move down could be a pretty big move in the account. And then a lot of these accounts, they have minimum requirements, or you'll be liquidated. And then when you're liquidated, you pay a $25, $50 fee. Again, it's not a massive deal, but when you're funding with $100 and you need to maintain $50 in the account, you can't have a trade that allows that drawdown. That's a pretty big drawdown, but intraday, I mean, you could have that type of drawdown move and then still be, in the right type of move to the overall trend and have a winning play out, but you could get liquidated, right? So you got to be careful. So I'm going to tend to avoid playing that unless there's like after hours big moves, right, where you have earnings that could move stocks, or not playing stocks in the overall market, where you have earnings that can move the overall market, and then maybe there's a bull flag or there's a rejection. There's something there, and after like an hour or two, it starts to slow down. Maybe there's something there. Or like early pre-market, if there's news, sometimes you can get news off of the CPIs. Well, that's too volatile. I wouldn't do that. But you can get news, let's say, off the jobs report, stuff like that could give you like a bull flag or whatever, that could give you a decent pattern to play that maybe you couldn't have traded in the regular hours, or you couldn't have traded with options, or you couldn't have traded really with much outside of maybe a 3x ETF in the pre-market or whatever. And that's where futures, could be an option. And it's generally going to be a little bit slower still in pre-market, versus if that news comes out intraday, or like when we have the Fed meetings, those moves are humongous. I mean, it's not something to mess with then, unless you are willing and able to handle a drawdown in the account. So ideally, you'd kind of want to play or fund the futures account at a minimum playing micros. If you're going to start a small account there, you got to fund it with at least a couple $100 to give yourself enough leeway to now be able to, take 5 trades, and if they're all wrong, right, if they all don't work, still be okay and not get liquidated or not fall below the minimums, right? So that's just my 2 cents. Although I do think that maybe at some point in the future, that's probably where I would go, because I just like that better than playing options and having to worry about decay. No, just play the price action intraday, and you're going to get the same leverage, just size accordingly, and that's fine, So that's the deal across that. But for now, I'm not really too focused on it. It's not like something I'm going to be, worried about. But another additional option / feature. Look at this, Microsoft into the close. Still got about 25 minutes to go, but Microsoft is breaking out over this resistance here. Playing some ES. Yeah, no. I mean, imagine playing it for like the Fed meetings. Imagine being on the right side of that too. Oh my gosh. You're up like, thousands in like a second. Depending upon if you're playing the micros or whatever. If you're playing the minis, and you can, if you're sizing in the minis, yeah, you can be up thousands in seconds. That's the thing. I've been watching too. I've been seeing, because I don't watch too much, or I don't follow too many people, at least, because to be honest, like any like free time I have is spent either like working out or whatever, a gym or whatever, and probably not looking at like finance content or watching videos and stuff like that. But for some traders that I've seen / followed who have gotten into futures, it's pretty crazy, because you can multiply accounts, no PDT, you can trade all day if you wanted to. It's not good, because you can find yourself over trading. But I've just seen, like, looking at some trading reviews that I've seen, people are like, oh yeah, I was in here for a little scalp, and I'm like, you were in, like, they're talking about like looking at like I don't know, let's just go look at some futures. They were talking about like being in some S&P, and they're like looking at the trade reviews. They're like, yeah, I was short, and in this little candle. I'm like, you were in and out of a trade in a matter of like a minute. Like, that freaks me out, because like just like that, you could have a candle that rips you up. There could be news, there could be anything, right? You could be down, and then they're like, oh yeah, I made about $3,000 off that. Like, you could be down $3,000 in no time. Like, that's crazy. The risk, the scalps. I'm not a scalp. I guess I'm not really a scalp fan, so I can see. I guess I can't see it, but like, geez, man, like that's like, it's a lot. I guess it's the same as options, but you size accordingly. But my goodness, I would never really want to be in something that is going to be that volatile based on the account size, right? Depends on your account size, I guess. Dow futures, each point gain. Yeah, Dow could be a little bit better. I mean, you're looking at, I was looking at, here's the Russell. Funny, this is just today's chart. Here's the Russell, but the Russell will move, every tick is 50 cents, but each tick is like a tenth of a point. So same thing though, like if you just do the math, like on playing the micro E-mini Russell, right? Let's just say that you happen to buy like right here at 1800, right? So what's the math? If every tick is 50 cents and there's 10 ticks in a point and 10 ticks in like a $1 move, right? In 1 point move. So what does that mean? That's $5, $5 per point. So from 18 to 1806 is $60. It's like off this little move, off of one little contract, that's $60 if you obviously bought there and sold the top. And in the grand scheme of today, imagine having snagged some down here. That's off of one contract. This could be a couple $100 trade. Like if you had been there for this, which in options terms or in 3x ETF terms, many people will hold for that entire move, right? But in futures terms, you just have to understand the risk. And as long as you're sized appropriately, it's fine. But you get some pretty great leverage there. It's just kind of crazy that I don't see more people trading that, to be honest, and blowing up. I feel like it's becoming more of a trend now, but everyone is more so like still like looking at options and going, oh man, like you're playing same day options. People don't realize. I feel like there are some people, the gamblers out there who are like haven't really discovered futures yet, but once they do, it's like going to be game over. They're like, oh yeah, this is the best thing ever. No theta decay. Killer, But yep, I mean, I've been liking that. I've been liking the 15-minute charts, 5 minutes, 15 minutes. The 1 minutes I don't really tend to look at. I tend to stay away. I've been liking the 15-minute and 5, for day trade ideas off of even just option plays. That was how I played these. We can talk about some of those too, because there was some good lessons there. What do we have? Go back to this. Today on the small account, we had AMD. Oh yeah, this is a kind of a test of trying something out. So AMD, I looked at last night and I said to myself, okay, here's AMD's daily chart. I'll go to like the past 3 months. It's probably easier to see. Yeah, past 1 month. Here's AMD 1 month chart. Give it a second to reconfigure. Okay, here. So you clearly had between 59 and then 56 was your range. Now there were outlier days where it dipped just below and then popped above. Yeah. But I was sitting there saying to myself, okay, AMD above 59, could give us a pretty big pop, right? And especially if today's a risk on day, the dollar was coming down, 10-year was coming down. SPY looked pretty good. At the open, which I never do, right? At the open, I was like, okay, well, if we trigger above 59, then we could have a pretty big pop today on AMD. So what I decided to do on this play was AMD, literally look at the time on this contract. Let's see if I can find it. Here. I bought at 8:30:53, which means within the first minute of the market open in my time, because I'm Central Time, I got in. I never do that. But it was essentially one of those plays where it was we opened up immediately, triggered over that 59, and if we pop that, I was like, well, this is going to be a really nice spot for a potential breakout to the upside where we can see a dollar plus move on AMD if today is that risk on day. And it ended up being, it could have been wrong, but the way that I decided to play it to minimize the risk is that I played the same week expiration, so it was still 3-4 days out until it expired. But I played, where does it say? I played the $65 calls. So AMD is at $59. So the $65 calls are 11 cents at the open. They're 11 cents. These are cheap, very cheap. So my risk here is, okay, if it's wrong, then we lose 30, 40, 50%, relatively quick. They're going to hold some value because there's still 4 days until Friday's expiration. They're going to hold some value. So worst case scenario, we lose 50%, right? I'll cut it off a stop loss at like 50%. But our upside here is we're looking for 50+% upside. And that's essentially what we got. These ended up going, my net ROI was 80%, I guess, all in all. But these contracts ended up going for like 200%, something like that. Maybe even more, 300%, something like that, which is kind of crazy. So, that was the move on that, which is not something that I tend to do too much of. But what I saw was pre-market, we couldn't break that 59, and I had charted out, we're in the range from 56, 59. Above 59, yeah, there have been some spikes that have gotten rejected, but I was like, this is going to be a spot to look to go long for a breakout, right? Or and who knows if we're going to get a back test. Ideally, you want a back test to go long, but who knows if that's going to happen. So we tested it out and it worked. And not something that I would do very often, but if we're coiled up on a stock with 50, in this case, I threw $50 at it, was nothing crazy on the small account. So throw a small chunk of change at something like this where you're going to end up risking, 50, maybe even close to 100% on the contracts. But if it goes your way and you get the big outlier move, in this case we did, the contracts go 100, 200% easily, right? Now, of course, I paper handed it and sold at 80%. I mean, I scaled out, but, in theory, there are people who I've seen who do this not all the time because you don't get these days every day, but who do this a lot and know how to play these pretty well. And so I just wanted to test it out, and it worked. So we'll see if that continues, if we get plays like that in the future, but that was a nice play. So let's see. Fees can kill you though if you're futures high fees. Trade of 8, no plan, it's 79 cents commission and fees. Yes. Not too much overtrade. Got the 15-minute chart sometimes. Scalp, the most part, yeah. No, yeah, the hourly charts are good to establish, directional moves too. Appreciate the $5, man. I want Tesla to touch $200 tomorrow. Let's take a look where Tesla's at. Is that 220, man? That's a pretty big move down from here. That's a big move down. It could do that. It was there yesterday, pretty much. That's a big move down. Now, if we get a big dump in earnings off of Google and Microsoft, if Google and Microsoft are just misses, then we could be there. But that's what you're going to need to see. Pretty big reversal today off of Tesla. Pretty big. Swings were back in play. I know. I don't think that they will come back, and we might get a window here for them to come back, and maybe there's a bigger window than we think. But I was looking. I have a little list of small caps that I'll keep on the radar. Take a look at this. Where is it? There she is. Take a look at this chart. I mean, grill. This is the grill weekly chart. I mean, higher lows, building out throughout the mid to upper 30s, lower highs, coiling up, just setting you up. This is just setting you up. This is going to have a day. When the day comes, right? I definitely would love to be there. Who knows if I'm going to be in at the time. But my goodness, I still like this chart. I still do. Grill. So we'll see if we can get another crack at it. But it looks like this is one of those picture perfect small cap bottom charts. Like sometimes you'll see charts where it's like it's tough to justify a bottom because you'll have a big move up, a big move down, right? And then they'll like kind of bounce around. They'll do something like this. And then they'll kind of start to go like this, right? And it's like, yeah, you could say it's bottomed out. Some will say it's bottomed out. And I agree. But if there's no news or there's no spike in the near term, you're going to continue this downtrend. It's going to slowly bleed you out over time, which is like kind of the problem with trying to bottom fish. And I've been there, done that, and have had great success. And I've also had some horrible plays across that as well. So that's the thing. It kind of sucks, but it's not often that you get charts perfectly kind of setting up like this. But if there's a bottom setup that I like to see, it's this. It's establishing a low and then establishing higher lows versus that low, not by much, right? Like, the lows on Grill are at like 32 cents. We're at 38, 39. So the higher lows this past couple weeks are at like 35. So not a like massive, like it's not like it's, oh my gosh, it's 35. It's like 50% higher now. It's like, I can't really justify getting in that. No, like you're really not going to risk too much. If you're in this play now, let's just see, like, what's the risk? Yeah, and you kind of got to stop out. I mean, you can't just sit here and say, hope and pray, because you can be underwater, massively. Let me adjust this guy. Oh, my chart's all wonky. So if you got in here, let's just say your risk is down to like 32 cents. A 2-to-1 risk reward would be a target of like 50 cents. It's pretty good, and it's a pretty realistic target. 50 cents is a pretty strong area of resistance in penny stocks. In this case, you're kind of looking at like a micro penny that's a sub 50 cent stock, as we call it. So yeah, it's not a bad. It's a pretty good risk reward if you ask me. I mean, I would love to accumulate lower, but it's not a bad area. What I'm probably gonna do, because we turned the Webull to all cash, which, by the way, I just checked, it's still not available. It's taken longer than, well, I guess I did it last week, so I'm expecting by the end of this week the Webull to be available. So the small account is a separate account, but I turned the other account to go cash every night, essentially. So I turned it from a margin account to a cash account. But let's see, it takes like 6 business days for them to transition it. So we're waiting at least, or like it takes around that long. So we'll see if it ends up playing out. But my thought process is probably going to be something like, if the account is, I don't know what the account is, but let's say maybe like 2%. Does that make sense? Let me just do the math. 2% of 8K is, let's see, $160. So more than that. So maybe like 5%. 5% in an individual small cap swing. So like grill maybe a couple $100 at, nothing crazy, and then swing it like that. Nothing super heavy. The intention of that account will be to be, exiting stuff. There will be swings in there, but mostly it will be day trades. So I see in the 15-minute, 1 hour and stuff like that. Nothing crazy, but no scalps really. Unless I've really started to find a system that works better on scalps. But yeah, I would definitely like to get back into the smalls at some point. What do we got? Expect from Google, Microsoft. Let's take a look. What do we see chart wise? So Microsoft breaking out to the new high right just now. It's back testing a bit. We got a lot. There's a lot of resistance right here, right at where it's at. So this is going to be really, obviously you have the earnings that can send it through. I'm not going to guess on the earnings. I literally don't care to guess, but I think the options are pricing in. Let's just take a look. What is, by the way, this yin, YINN, the 3X China ETF from yesterday's low, if that is capitulation, this might actually be a decent swing trade. Not that I'm in, but I was watching it. If that was capitulation for China yesterday, maybe it is. Oh, look at that. TMF just sold. One of my contracts just sold. I sold an 11.18, $10 TMF. Okay, cool. So TMF is, I think my average is like in the $9 area. So I sold a 10. That's good. I sold it for $20. I think. No, for $5. Free $5 in my view. Okay. I'm getting distracted here. We got 10 minutes to go. Microsoft options are pricing in roughly, it's at like, they're pricing about a $5 to $6 move. So if you're playing puts, you need Microsoft to be at 244 tomorrow to break even / make money. Well, no, to make money, because these will still have, 3 days of time. So you need, about a $5 move to the downside or upside for you to be green tomorrow on your Microsoft puts or calls. So that's what we're looking at across that. So they're pricing at about a $5 move, which is nothing crazy. We could easily get a bigger move than that. If we just think about where that would put us, a $5 move up puts you here. $5 move down puts you here. Something like that. So that's, and right in between is where we are at right now with resistance. So we got some strong resistance right here on Microsoft. So we'll see if we get that in the off the initial reaction, which both Microsoft and I think Google was actually a downer on last earnings, but Microsoft I believe was initially down, and then it rallied back super hard. Let's go back to that last earnings. So it missed, right? So we actually had a pretty big sell-off that day. So Microsoft sold off pretty hard on that or the day of the earnings going into it. Then if we go, let me go to like the 6-month chart and see if we can find it. Yeah, look. So we were sitting here at the close. Let me go back to that daily to see where we were at the close. At the close, we're at two. We pretty much closed just north of 250. We found that to be support back on the last earnings from Microsoft. And then what happened was off the earnings, we dropped from 250 down to 244. And then, right, rallied back all the way from 244 in that same after-hour session to 267. Next day, opening up somewhere around 260 and then finished the day up here towards 268. I mean, crazy moves. So the moves were pretty wild off of last earnings for Microsoft. In terms of the initial reaction was a false move, right? The initial dump. Kind of crazy. Well, I guess, although maybe not really that crazy in this environment, this day, 2022, right? It's not like it's, I don't know, 2014, 2015, 2019. Even those, there was individual volatility. We've got a lot more than that, I feel like, this year. Trading the Bitcoin miners. Yeah, no, I was looking at Mara's up massive. 15%er. Let's look at the daily on this thing. Wow, look at that. I didn't realize it had a nice double bottom at this like 950 area too. My goodness. Really nice base and turn to the upside there. Above the 50 moving average, 200 moving average is up here towards 16 bucks. Could be your next spot. Outside of that, if it keeps going, maybe up towards 20 could be a really good spot to target for tomorrow. I mean, we got last push up to back in August, up to about 19, and then 20 bucks would be a really good spot. Why? Because really nice area we'll find of supply here. Look at that. Resistance. Bunch of support levels, bunch of lows, a bunch of dip buyers came in at that area over the past year and a half and got rejected just shy of that. So if we get up to there, that'll be the next key spot, I think. Also, it lines up with volume too. Look at the volume profile. Not much volume from 15 to like 20 bucks. There's not much here compared to over 20 and then below 15. So, remember when I asked about BBY? Bed Bath & Beyond. Yeah, you know what? I saw some stuff this morning. It's funny. I saw some high volume on some calls and stuff. But yeah, we were talking about this yesterday. It's kind of crazy. It ended up going to new lows. Yeah, it did. Yesterday, it went to new lows on the year. Crazy. Like, chart doesn't look great, right? I'm not going to sit here and say I like this chart, but like we said, if we go risk on, just like the August rally that sent BBY from, $4 to 30, you're going to have a good chunk of rallies on a lot of these meme plays or heavily shorted stocks and whatever. So got to break over this 6 or this 550 now on it today. That's your resistance from the past couple weeks. But no, this could definitely, it could go. I'm not going to say it's going to go again, but it could totally go again. AMC, what's AMC at? Yeah, solid day on AMC as well. So what's another meme stock? BBIG. BBIG kind of got some, oh, look at this. This is a really interesting look. Talk about coiling up. BBIG, my goodness. You got a lot of dip buyers coming in around here. Sub 95 cents down to like 90-ish. Coiled up. She's coiled up and she's ready to go. Look at that little wedge, descending wedge. I mean, we had a crazy move back in August. Like a lot of stocks back in August, and meme stocks and risk on stocks. But if you were thinking about something like that, that could be another one to keep in mind. Just, one that people will come to eventually. Moen already kind of had a move. I do think Moen's another one of those kind of like meme risk on names. It's already had a pretty big move, so I'm not sure I'm a huge fan. It already hit 50 cents. 75 would be the next spot I maybe be interested in, just next target area if you were in. If it holds like this 50 area. But yeah, that's a nutty one. SDC, yeah, I have SDC linked up here. It's another one as well. Yeah, look at that. SDC pretty much just recovered yesterday's dump. But I think Smile Direct Club actually has more like realistic legs, I think. I mean, would have to look at the earnings and stuff and see how the earnings comes out, I guess, looking back. But I think it has more realistic legs than some of the other meme stocks. So this one might be worth maybe accumulating under 80 cents if you were potentially looking for something like that, some exposure. I had calls back here. I cut them off once it fell back under $1, I think. But yeah. I had a company reach out, which I'm going to check out their stuff today, for a possible, I guess, partnership where they have like, I wouldn't say, I would want to look deeper. It's not like it's like algorithms, right? But it's more of like a signal service, a cheaper, I guess, version of like a traditional signal service, but it's more like AI driven and it's more like auto pattern detect type stuff. So like if you like in my initial thoughts on it were pretty much like, okay, if I am looking at, if I know based off of my experience that I like trading descending wedges, or I like trading bull flags, or I like trading bear flags, right? I can essentially use this platform to detect those patterns for me instead of having to go find them myself and then go and look at them. Do I like it? Yes, no. And then play it if I like it or not, right? It's kind of a cool, way to look at things. So we'll see if it ends up handing out, but it seems pretty cool. Check them out though. I'd get a ton of that stuff. You guys know, I literally don't promote much at all. Like there's not much stuff that I use really. And even that is minimal. Let's see. SPY into the end of the day. We'll look at Microsoft and Google. We got about 2 minutes until the end of the day. We'll check these guys out. SPY pretty much going to finish up towards the highs. A little bit of a pullback at the last minute or two. That's 5 minutes. But nothing super, super crazy. But it's trying to, it's had a really strong day. So the question of this is going to be, is this ultimately a little bit of a fake out before a double dump off of this earnings for Google and Microsoft? We shall see. But we're getting closer. We're getting about a few minutes away. So it should be an interesting time. Again, when we look at things, right, the S&P sits at just underneath the 50-period moving average. We are very close, by the way, to that 390, which if these earnings are digested well, we could be looking at a 390 test tomorrow right in the face. I mean, that could be the spot, which was a really crucial spot about a month back. I mean, it felt like, I guess it feels like a few months ago, but it really is only a month ago. Late or early September and early to late September, we were testing that 390 area and held support and then bounced and then fell below, and that got rejected hard on a retest. So that'll be the key spot. But let's look at Microsoft here and Google into the close. Microsoft is pushing up to hitting a new high of the day as we speak into the close. Believe it or not. Is it the ultimate fake out? But that 250 has been a really nice spot to watch on Microsoft. It's been a really good area of resistance all day until just about an hour ago, and it broke above it, and now it back tested it just about 10 minutes ago, and is now bouncing from that 250 up to about 251 almost here. And with that said, we're about 10 seconds away until the close. No drop shipping or anything with the FBA. It's funny. I actually used to back in, I guess it was college. I used to drop. I tried. I mean, I never was super profitable with it. It was at one point slightly profitable, and then I lost it, and then it kind of died out. It was a fishing store. I sold fishing line. It was fishing line was my number one seller. Super random stuff, but it worked. I mean, I was spending thousands of dollars a month on ads and then essentially breaking even. Boom, Microsoft initially popping off the earning off of this after hours. Let's just see if we get earnings. Let me pull up a little news and see if we get some numbers. I'm assuming we're going to get them pretty fast, and then we'll check on Google, and then we'll get a good feel for what we see in the after hours here. So Microsoft in the after hours, if that's actually valid, is at 253. Has yet to confirm there. We don't have much volume at least yet. Let's see if we get more. Let me add the volume in, by the way. Let me just add the volume really quick. So huge volume into the close, not surprised. And now it's dumping. So Microsoft initially off this. Let's see if we get the actual readings. And we can dissect it a little bit more too once we get it. Nothing that I see yet. Dumped 242.21 is the touch we just saw bouncing. Again, let's just zoom out on this chart. What we saw last earnings for Microsoft was a miss. Well, I don't think it was a miss, I think, but we dumped and then we rallied super hard like an hour later. So we rallied back like crazy hard an hour later off of Microsoft. Google was, I think, more of just a downside. Here it is. Microsoft Q1 revenue comes in and they beat on revenue, 50.1 billion versus estimated. EPS comes in at 235. Is that a miss? Let's just check what they were expecting here. EPS came in at 235. Let's see. 231 is what the estimate on EPS was. So it looks like a beat across both numbers from what I'm seeing based off of those numbers that I'm getting. Intelligent cloud revenue came in above as well. So it looks like beats across the board, across the initial numbers that we're seeing, beats. But again, when you get, just because initial number is a beat doesn't mean that it, means the stock's going to just rip and go to the upside straight up from here. Let's check in on Google. Is there any reaction on Google yet? Google is dumping down from 105, closing the day at 105. It's at 101 here. We should probably get that. We should probably have the earnings here on Google. Let's pull it up. Let's see if we can get some juicy numbers here from Google. Well, I guess they're not going to be good, right? These reactions are pretty fast. I have yet to see anything really come through. And always when you go to CNBC, you go to a lot of news outlet sites, it's generally a delayed reaction. Okay, here it is. Google misses. EPS comes in at 106 versus a 127 estimate. Is that accurate? Here's the EPS. Yeah, they were estimating about 127 on Google, and they missed. So Google with a big EPS miss, about 20-cent miss. So Google drops about $5, about 5%. So far, today's move across the S&P. Now, of course, everything can change tomorrow. And what we see last week, if you give last week any sort of reference, we actually saw misses that then correspond on Tesla. I believe it was a miss, or Tesla was down off of earnings. And then I don't think it missed. I think it missed on revenue. It beat on EPS, but Tesla was down off of earnings, right? Whatever. And the next day, and the market was actually green. Netflix beats earnings, has a really good reaction off earnings, and the next day the market was red. Not that Netflix is a massive market mover. Tesla has a lot of a heavier weight. These are much bigger weights in the S&P. We can cover what those are in a second. But Google and Microsoft are two big weights. I believe Microsoft is up around 7%. Google is a couple percent as well. So these are big movers across the NASDAQ and the S&P. So jumping back to Microsoft, it seems like we had a beat from my understanding here, from what we saw just a few minutes ago. Let's see if I can pull this up, though. Fast Star Market News. Let's pull this bad boy up. Okay, here's some more information. So Microsoft revenue beat and EPS also beat slightly. But Google was a pretty big miss. So it seems like that's where we're getting more pressure here. So Google, let's take a look. They come in with EPS of 106 versus an estimate of 125. It's a pretty big miss there. They came in with revenue Q3, 57.27 billion. It's a miss on revenue, looks like. Q3 operating income also was down we're off by about $2.5 billion there. Google Cloud revenue was up. That was a beat. They beat on Google Cloud revenue. But they had a couple misses in there, which is why we're seeing the downside we're getting on Google. So if there was one, I guess that might be more of an overreaction. Could be Microsoft to the downside just with Google's pressure. But Google is essentially coming down 98 now in the after hours, down about 6%. That's a pretty big move. Let's just take a look. S&P 500. Let's pull the weightings up. Boom, so we can see this nice and cleanly. Let's see, slick charts. Yeah, this is fine. So Apple has the heaviest weight. Apple 7%. Microsoft is 5.77%. Amazon. So Apple, Amazon, the next big ones. Alphabet comes in a 2 and then a 1.7. So Alphabet's up there with a pretty substantial weight, couple percent. Tesla was at a 1.76, but what you need to be paying attention to is these two guys. So Microsoft is 5.77 and Alphabet is Class A shares are about 2%, and then Class C shares about 1.7%. So pretty substantial weights in the S&P on those two guys. Google down about 6.5% in the after hours. Microsoft down about 2%. Not that bad. Microsoft pretty much just gave back a little bit more than today's move. Google, though, gave back. You got to go back to Friday. You're back to the lows, the general lows of Friday on Google. So it's not that bad. It's not down to the new lows on the year. It's not down to lows that we were before CPI. We could, of course, get there. It's only a couple dollars away from getting there, but it's essentially down around the lows of Friday, of last Thursday, Friday on Google for now. But my goodness, some pretty big moves so far here. And now we'll see if we end up getting any bounces across these names or if these moves hold. Let's see. McDonald's and Wendy's. Dangers of diagonal put spreads. I haven't really traded many diagonal put spreads. Prefer option spreads, long-term trends. How would I begin learning about day trading? Looking for knowledge. I mean, as you are, I am as well. No, but the best way to learn is seriously, the best way to learn is trial and error. The same exact patterns and the same exact things that you use with swings can be applied to day trades. So the biggest thing is in the grand simplest terms of everything, right, is edge. Its psychology is massive, but that's really for anything. But it's a different. The difference is that I came from early on, and I'm still I'm 24. So for some people I still look like I'm 17, but I am 24. But back when I was like 17, I was obviously like the more long-term minded, like, okay, buy stocks and then go up over time, right? Invest, right? All that stuff. That mindset is completely different from a trading mindset where you're going to have stop losses and risk parameters and whatever versus, and then swing trading is a different mindset from day trading, because swings can sometimes, or day trades can turn to swings, can turn to long-term investments, and then you're bag holding and then you're down huge. And that's just blowing money away. We've all been there, done that, and experienced that. And it's just not a consistent strategy. In terms of day trades, though, the keys, I think, you have to have an edge. So in my view, an edge is technical analysis. So learn technical analysis, find patterns you like, that you see, that you can identify pretty easily, that you see repeat themselves over and over again, and day by day, week by week, month by month, and then back your way into establishing, okay, if this pattern plays out, right, nothing is guaranteed, number one. But number two, here's how this pattern works, right? Looking at bull flags, bear flags, supply, demand, trend lines, all those different things. Now, you might say, I'm really good at bull flags or bear flags. So guess what? I'm not going to sit here and try to, chop myself around and play everything. I'm going to just strictly dial into those two things. And that's kind of where I'm sitting at least now, in the process of figuring out the top or my favorite patterns from a day trade perspective. Hence the small account, trying all that stuff and trials and errors there. But let's see. That's what I would say in terms of actually getting experience. You have to get your feet wet. You can go, there's signal, you can go get alerts, you can go join people's discords and all those different things and pay for them and whatever, right? Those are all cool, but you're not going to see the same thing that they see. And sometimes what they see is not really going to be helpful to you because you don't see the same thing as them. And it's like, okay, how am I going to be the key is replicating it. Like, can you replicate it? That's like my biggest thing. What I've realized as I did a deep dive through the past, couple of years, I was like, I can't replicate the small cap swings that I like to trade, the bottom plays, whatever, and catalyst plays. I can't replicate that in this environment, right? That's not something I can replicate in a risk-off environment. No matter what you have, you're going to have a lot of downside. So that's from a swing trade approach where it's like, okay, well, swing trades are not going to work all the time. There will be times when they're great. There will be times where they're not. If I want to rely upon this money, then I need to have something that I can replicate every day or every week or every month that I can come back to and I see the same patterns and can take the same opportunities, right? That's what it's about. So I know it's kind of a very broad, bold, not broad, but it's very, not super dialed in. But the problem is that there isn't a dialed in perfect answer for that question, unfortunately. So it's trial and error. There's a lot of great videos and ideas you can get online. But just because a video or someone says this doesn't mean that that's what you have to do, So I would say that instead of putting money into someone's alert system Discord or whatever they have, what I would recommend would be start free information, right? technical analysis, trend line, like learn whatever you really want to learn, right? If you want to learn more and dive deeper in technical analysis, you want to dive deeper into order flow, whatever, right? Those are great, great. Dive into that. And then the market tuition that you're going to pay is going to be your like Discord, or yours going to be your Signal alert fee to paying someone else. So instead of making them rich, at least put that money in the market and, learn from it yourself. Because the worst case of where most people go, and this is why I, hate that type of stuff, is because most people end up in a situation where they're sitting back and now they have all this, experience, or they're trying this or trying that. They got all these different groups going on, and they're paying hundreds of dollars a month for this alert service, that person, this person, and they got conflicting signals going left and right. And then they go to the market and then they pay their market tuition and they lose even more money. And it's like, there's at a minimum here, we can avoid the paying other people for their alerts, because that's not something you can replicate. You would only be able to replicate that if you continue to follow them the rest of your life, right? So that's not something we can replicate long-term. That's my view. Market tuition is the best tuition to pay. Better than college tuition, in my opinion. And, I got some pretty strong opinions about the college tuition side of things, as I have, gone through a hefty dose of college tuition as of late. But yes, big miss on Google. Let's just see if we get some more. We get some more earnings info. There's some more companies out that are reporting. So let's see what we got. And there should be some more updates too coming from these companies as well. All right, Chipotle. What we got on Chipotle? EPS beats. Looks like Chipotle beats on EPS. They missed on revenue barely. Chipotle sees Q4 comp sales growth mid to high single digits. Chipotle sees 2022 new restaurant openings, 235 to 250. That's crazy that they're still opening that many more restaurants. CMG, let's take a look at CMG here in the after hours. The problem is that when you have such big names that ultimately, Chipotle is up about 1%, nothing crazy. When you get some big names like Google and Microsoft that miss, or that have downs, or Google missed, it's a big name. Microsoft didn't miss, technically speaking, but you're seeing some pressure there for sure. If Microsoft can kind of gain itself back and do the same thing it did last earnings, where it dipped, actually it's like the same exact thing. Microsoft closed at around the exact same price it closed before last earnings, and then it dipped to about 244 in the after hours. In this case, it dipped down to about 242.25. And then what we ended up seeing was Microsoft ended up going and pushing like 265 the next day, 268, some crazy number like that. It's tough though when you have a miss from a Google, and it's going to put a lot of pressure on the market and bring things down, right? So it's not as easy to come back, or at least for other stocks. Okay, here Visa is another one. Enphase and Visa are two other big ones. Visa boost quarter dividend to 45 cents from 37.50. Look at that, boom. Visa authorized a new $12 billion share buyback program. Q4 EPS, Visa beats on EPS, and they also beat on revenue. Look at that. Credit card companies still doing okay, at least for now. And I'm not surprised, because I'm really curious to see what some of the earnings. Visa is not really a crazy, high interest stock. So it popped a little bit in the after hours. It's up 0.32. Visa's chart doesn't look too shabby in terms of if it wants to keep going the upside. Probably has some nice room up to about 215 or so, 210, 215. We'll see if we get there. You got a pretty nice downtrend here on Visa on the weekly chart. So that'll put you up to about 210 on Visa. So it's that just under $200. So you might have another $10 upside until that downtrend hits, and then we'll see if the market wants to push us through on that. But let's just take a look at SPY. Not a humongous give back, but SPY in the after hours is down 0.53%, the S&P. So let's look at the 5-minute chart. You're pretty much down to where you were like midday off of this VWAP bounce before that pushed into the end of the day. So you really only gave back this afternoon's gains, not that much. Still sitting way above where we were. So to be honest, unless this really kind of dumps overnight, not a massive dump across the S&P. It's only down about 0.5%. QQQ though, probably gonna be down a lot more. Yeah, Qs are down about 1%. Qs are down about 1%. So Google new 52-week low by end of the week. That's where it looks like it wants to be heading to, right? Let's jump in and check on it again, see where it's at. Is it bouncing at all? Yeah, a little bit. It dipped down to 98 roughly in the after hours here. So 95.27 is that low of the year, looks like. So that would be, not that far off, a few bucks off. Want to buy Google and start selling covered calls? I think I don't think that's necessarily a bad idea either, even now, right? So if you get new lows, Google is a stock that could Google. Here's the weekly chart. Could Google come down more? I mean, pandemic lows were down $50. Could it come down? Yeah, but would you be interested in buying Google from, let's say, 98 all the way out, dollar cost averaging in, maybe down to 50 if we really did? But by the way, if we did get that would be like, that would probably line up with one of the better buying opportunities of our lifetimes, right? Across just the market in general. Because for Google to go down that far, unless of just individual Google news, the market's going to come down a lot more, which would probably provide a really good buying opportunity for a lot of us who have pretty long time horizons looking at things, right? Big picture. Which maybe we get like next year, who knows, right? That's kind of my thought process, is like if the Fed did over tighten here and has caused much more damage to the economy than they realize now, then I don't think this year is where you're going to crash, right? They only got 2 months left anyway. Next year is probably where you see more downside. And so maybe even into 2024 presents even better buying opportunities than what we have now, right? For all we know. So, I don't know, but that's kind of my take. I don't think it's a bad idea. I think just getting scared of the earnings is not something I would be, like, this is a better, you're getting it cheaper. You're getting it 6% cheaper than what it was this afternoon. It's not a terrible look, but the lower the better on something like that. But if you can sell covered calls across these big names, I think that's a pretty solid strategy. Like we've been always talking about. We talk about selling covered calls across a lot of stocks, and getting yourself in with 100 shares at a minimum is always great, so you can cash flow a bit more. Google's going to pay you. Do they have a dividend? They don't have a dividend. Microsoft's going to pay. Does they have a dividend? Microsoft has a dividend of 1%. Apple, for example, has a dividend of 0.62. So these tech stocks are, have no dividends essentially. But if you can get yourself in on some of these names and then pay yourself a dividend on top of the growth factor, if you do believe in the company growth long term, right, then it's not a bad look. Not a bad look at all. Should have played some futures. No, and to be honest, I'm thinking about it, like it might not have been a bad idea. We can take a look at them. I'm not necessarily interested right now. Let's look at the NASDAQ. I'm not interested right now because it's still pretty early on in the moves and you have some earnings calls. But like tonight, this might not be a bad idea, because there could be some, like, for example, look at this flag. It wasn't perfect, but you had here on Google, or on the NASDAQ, sorry, you had a dump down to about 11.575 bounce, and then a pretty big flush through to new lows. That flush to new lows, that breakdown, I don't like playing breakdowns, I like playing retests, but that breakdown is actually, pretty nice. So now if you come back up on this guy and you come back up and then you reject here, that would be a better short, right? On the future side of things. So maybe that's it's something I'm not going to touch it now. It's a little too volatile, especially with the earnings calls and whatever coming up. So no, but once like 8 p.m. comes along, like 9 p.m. tonight, maybe there could be an opportunity there, especially things are not going to be as volatile, right? So there's that, which is, I prefer things to slow down. And then there's less threats of someone saying something intraday that could throw things off. And so it's pretty much just slower price action. So maybe that's something we'll get an opportunity of later tonight. But that's kind of the thought. Visa buying back shares and increasing dividend. That's pretty impressive. And the stock didn't really move too much, but I'm sure tomorrow it'll have a pop. Hedge day would have been smart. Yeah, no, I think so. Should be able to make $300 per contract selling at the money covered calls on Google monthly. So Microsoft would be nuts. Yeah, no, I think so. Fat checks every month. Dollar cost average heavy this afternoon on Google, anticipating good earnings, but I guess wrong. It happens, but that's kind of the name of the game when it comes to Google. If you played, and who knows, this could all be reversed tomorrow for all we know, right? Again, and if Apple and Amazon, let's just say, come in with beats, on Thursday, I mean, by Friday afternoon, this could be a complete thing of the past for all we know. Or if they could just pile on and we can go down further. But to be honest, if you step back and look at, this is the NASDAQ, step back and look at where we are, right? We're here, right? Let's just look. We're here. in the grand scheme of what just happened the past like 2 weeks, we're still like way off the lows, So it's not like it was a mass. It's not like, oh my gosh, like we just hit new lows. It's the end of the world. But it's not that big of a pullback. And we had a massive day today, which essentially, what did today do? It just made us give us that little pricing in before the earnings pulled back to essentially get us to almost flat, right? To make us, we're still technically up. But I just saw a news piece come through. Google repurchased $15.4 billion of stock in quarter 3. So interesting fact there. But again, the same thing, like if you're dollar cost averaging into, let's just go back to Google. If you're dollar cost averaging into Google stock, that's a different situation, right? Because, yes, okay, it's down off the earnings. Sure. If you were loading calls for this week or for next week or even next month expiration today, and then you get this move, it's devastating. But when it comes to shares that are, ideally a longer term view, then it's not as nearly as devastating, right? Off these earnings plays. And Berkshire Hathaway shares, lots of IV crush coming tomorrow for earnings tonight. What do we got on Microsoft? So Google's down about 6% in the after hours. Microsoft is flushing off a little bit with Google too. Now it's down about 3%. Microsoft is. So $5,000 cover calls. I won't trade the stock without options, need them to hedge. No, especially if you're long shares, right? Or whatever. No, I like that. Let's jump back to those futures and let's look at the S&P futures, how they look. So how much have we given back? I mean, we're back down to, would I dare to buy this dip right now? Like, no, not really. But we're down to this afternoon's, dip buy essentially. So this afternoon's dip buy, on the S&P really was right where we're sitting at right now. So we haven't given back. We haven't even come back. I mean, if you by tomorrow, if you give back today's entire morning rally, then that starts to look a lot worse, right? By tomorrow. But if we sit there tomorrow, wake up and we come back and do something like this and then bounce around and then pop back up, that's a possible option as well. And that would be a pretty healthy market move. Like in the grand scheme of things, if you're long, that would still be a pretty healthy move. Didn't wait. First time here. Good info content. No pumping. Yeah. Hopefully that's what everyone takes away. I mean, I really appreciate that, but also I don't ask enough. If you guys wouldn't mind the thumbs up button, we're not gonna. We'll hang out a little bit longer, but we pretty much covered the basics of what happened, and the idea behind it is, and I hope that's what people get out of things, because I don't care about we're not gonna sit here and try to say buy, get in the market, go short, go you gotta make your own decisions, like we always say. And we all are going to have this. We're all going to have ups and downs, and hopefully the community aspect of this channel is a positive people can take away, and that's what I think is the most valuable thing here. Because there's not, and the reality is that a lot of people, and it's easy to do, especially with the whole past peak, COVID, GME, AMC days, all that stuff. Easy to do, because if you just make videos on the next short squeeze, right, you get a lot more. Well, I guess you could get a lot more views. There's generally a lot tighter knit communities who are all biased and one sided, and the problem with that is that's fine, but everyone has a confirmation bias, and no one's able to look at the other side of things and present two sides of the argument and say, hey, should we be looking at maybe not being long here or taking profits or whatever, this or that. That's the whole thing that I hated with that whole, I guess, push that you had, through all that stuff. But, I hope people get stuff out of the streams and videos. This week we're streaming every day for Power Hour. I usually do Monday, Wednesday, Friday for Power Hour. But this week with earnings on Tuesdays and Thursdays being the biggest days. I mean, going back to the earnings chart, today we had some big ones, Visa, and I got to look at Enphase. I want to look at that. Google, Alphabet, and Microsoft. Tomorrow, Meta, Ford, not huge, but there should be some big movers tomorrow afternoon. So we'll see. Meta will be the most interesting one. Not that it's going to massively move the S&P and the NASDAQ, but it should provide, Meta's been destroyed. So there should be a big move. It could be a big move off of that. And then Thursday, Apple, Amazon will be huge as well. So we'll get a good feel. And usually Fridays are just chill afternoon sessions that we kind of hang out and just and talk about what we see, right? And we'll see. Let's take a look. I want to jump back to Enphase. I know, yeah, here they are. Looks like they beat. Let me just double check this though. Microsoft says rising energy prices boosting cost to deliver cloud. Chipotle beat. We talked about that a few minutes ago. Visa beat and increased their dividend and bought back $12 billion of shares, or is authorized a new $12 billion share buyback program. Sorry, they didn't do that yet. They authorized that program. Enphase. The Enphase beats on EPS, comes in at 1.25 versus a 110. Let's see. They see quarter four revenue ahead of what they were expecting. So they had an upgrade to their projections there. Quarter three adjusted gross margin came in higher. So Enphase looks like it probably did well, right? Let's just go look. My guess, based off of reading that, of course, there's always more to the story, probably should be up. Well, look at that. It did pop and then it dropped. It's actually flat. Enphase is funny though, because Enphase has been one of the stronger growth stocks over this past, 2 year or past a year span. I can't believe what I've really been seeing. It had a lot of pullback on Enphase really from November of last year, topped out at like 280 something. And it gave all that back in about a 2-3 month span of time. It essentially just said the downside that we saw that we're seeing even across the S&P, like now a slow bleed is kind of how it's felt this year, right? Enphase is like, screw the slow bleed. Let's just do it all now. And then since then has been pretty constructive in terms of higher lows and hit a new all-time high a few weeks back. Kind of crazy. But that earnings seems pretty good. However, the problem is on a stock that's moved a ton, right? Especially off of the last earnings they had a really big move off of there. How much is priced in at this point? And so you could be kind of looking at maybe, not a huge move off this earnings, even though it's up about 1.5% right now. So we'll see. Free girls in your city. Yeah. I'm getting all these spam things. I keep reporting all these things as spam, but I keep getting these things. It's pretty annoying, but I guess it is what it is these days, right? Google. I mean, I report it. I block stuff, but Google, and I guess, Google's down, right? Google, you can't get a handle on the bots and stuff and spam. So yeah, your stock gets slashed. I get it. Let's see. Well, this channel is only want to watch. I appreciate that. I feel like that is sarcasm, but I appreciate that though. Sneaky shorts was feeling a little weary though. I mean, again, bigger when you zoom the time frames out, it's not that big a deal, right? From the grand scheme, like we've talked about, could we have a rally into the end of the year, midterms? Like, there's a lot of reasons why, like seasonality, a lot of reasons why, like we could get a good rally here. Maybe in terms of the market, like it looks on the S&P. Look at SPY trend line. I know there's a lot of lines. I'm sorry, but this is like our target, this trend line. So we hit up to about 430. This trend line continued to the downside, would probably line up into the end of the year, like around 410. So like 410 might be like a legitimate rally zone on SPY, So we'll see, but but that's the spot. Bet Ford misses. Ford, what does Ford's chart look like? It would be funny to see. Ford has been wild. I was back in the day, not the day, I guess, but months ago, I was thinking to myself, because I do need to, I haven't bought one yet, but it's very possible that I'm going to need to buy a car relatively soon into the next few months. But the good news is that I haven't, luckily, it didn't pan out to be the time that was peak car market. That, by the way, the used car market is getting absolutely slaughtered. Let me see if I can find it. Used car. I'm pretty sure I can find the chart really fast. There's some pretty big accounts that have been tweeting out these charts. Let's see. Give me a sec. Yeah, here, boom. Here it is. So this is the used car index. And look at this. I mean, in terms of this obviously went crazy. This negative 9%. I'm sorry, I'm covering. Let me get rid of it myself for a second. This -9% was like COVID, but then we had a massive surge, right, in used cars. And even it pulled back and then it bounced again, right, like late last year into late last year. Because market was at all-time highs. Everyone was doing well. Economy's great, right? All the stuff. Feds didn't raise rates yet. Oh, yeah, everything's fine and dandy. The rates are still pretty low. Cool. It's getting absolutely destroyed. And I don't think this is going to like be like, turn positive and bounce back up like, next month or next quarter. It's probably going to be down and stay negative month to month for a while. So if you are looking for a used car, like we talked about, I think I even mentioned in a video a while back, like technically speaking, like this is the time in a recession, like this is the time that you would actually want to be buying or looking to buy a used car. Because what sucked about like, I don't know, 6 to 12 months ago, and I know my parents had a situation like this where they needed to get a car and it was like kind of had no choice. So if you had an extra car lying around, now not many people do, but if you did, that was the time to dump it and say, I don't need this car. Let me just sell it while prices are pretty high. And fortunately, right, that's not where everyone kind of like, if they're going to get a new car, they sell theirs and they buy a new one. You're kind of getting screwed because you're probably going to get a pretty crappy price from your car by the dealer, and then you're going to pay premium for the new one or whatever. But I need to do that. I was looking at Ford. Why this makes any sense is because I was looking at Ford, and I really like the Mustang Mach-E's, the EV like version of the Mustang. I like them, but they're kind of expensive in terms of like the demand was still too high. That probably is coming down. I'll have to check. I'm not gonna actually get one right now, but if prices weren't as aggressively high, even for like a used one, I was maybe considering it, but we'll see. But they upped the prices for all those things. I think the F-150 electric is like, the demand, at least it had been. I'm not sure the numbers are now. Maybe we'll get some more info tomorrow, right, on some of this stuff. The demand was crazy. It was through the roof across those cars a year ago, even just 6 months ago, right? The 2022 Mach-E's sold out or whatever on Ford's website. So there was like a period of time where you couldn't even, go on there and buy one. You had to just go to a dealer if they even had them, right? Which not many had. So it's interesting. Ford kind of has this double bottomy type of look right here. It's had a decent drawdown really the past few weeks, but there's a small gap to fill up to about right here, which is about 1460 or so across that zone. So we'll see if this ends up, if we do get a positive ER tomorrow, right? Maybe this is going to be a spot to look at for a target, or, maybe a sell area or whatever. But we'll keep that one in mind. I'll leave that on the chart there for now so we can come back to it tomorrow. But wouldn't be surprised if it does miss. I mean, Ford has this look too. If you just look at this big chart, I mean, my goodness, if you just zoom this out, right? Look at this. Like, you're sitting on this support level pretty much. If that goes, you could be coming down sub 10 pretty quick on Ford. And I would imagine now, if the market's probably going to need to be pretty weak and dare we say, go towards new lows, or at least, back test a good bit here, outside of Ford having horrible earnings. If it's a small miss, not a big deal, but that's the spot there. So if under 1075 is like, uh-oh on Ford. So we'll see. No transparent, no BS. Yes, that's that. And it's funny because I don't necessarily watch much, many people trading wise. I used to be like the big, like years ago, like in college and prior to that, was like big into like the finance YouTubers, like a long time ago. I'm sure you guys know like the Graham Steffens and all that stuff. A long time ago. That's like what I initially kind of like got into or started watching, and after a certain amount of time, the information is essentially the same, every time. So you kind of grow out of that and you start moving into like what other interests you have. And it's where I kind of got into trading and got into, analyzing other markets and stuff like that. And that's when I went to school. I went to school for meteorology originally, but then I didn't transition. I still got a meteorology degree, but I got a minor in energy business finance. So I took it like that route. That's where my interests really were, as I realized that the future of weather is more so coding, data, all that kind of stuff, building models, which like I had an internship doing that stuff one summer and I was like, oh my God, I can't do this stuff. it's cool if you're into that stuff and you have a knack for it and you really enjoy it. I just can't. I hated it. I hated it so much. I love interpreting models, all that stuff. Interpreting, it's similar to like interpreting charts and stuff like that's what I like. I enjoy a lot more. But as I kind of grew, I guess I don't know where I'm going. I'm like rambling on these things. But as I got into like this stuff now, or as I kind of progressed, what I found, and I think it's really, hopefully, there are people out there. There are great people out there in the trading community and on YouTube and on Twitter, on other social media platforms that I don't even know, to be honest, like that I haven't even discovered yet, that are awesome. And I'm sure there's very transparent people, but the majority that I have found are not transparent at all. And what I mean by that is that you can have people who post, screenshots and all that stuff, which is cool and it's great and it's encouraging, I guess. But the problem is that when they start to sell things and whatever, and it's like, you have no idea, who you're talking to, who you're looking at. Half of them don't even have like actual, like their actual real names are not even on their profiles. So you have no idea who these people are. And they're just essentially selling a dream and they're just profiting. I mean, we've talked about in the past, I mean, there are some big alert services out there, big alert services that charge $100, $200 a month, have thousands of users. I mean, those people are making hundreds of thousands of dollars a month off of you, essentially off of us. And they don't need to trade. Like they don't need to do that. Like they're trading with, whatever size accounts. At that point in time, it makes it, I guess, technically easier because money doesn't matter. So they're able to be a lot more objective, I guess, in the moment. So there's all that stuff that I never like, as I unpacked it and learned, like, yeah, it gets kind of how it is. And then on YouTube, especially, you have the clicks, the views, all that stuff, and people push for that stuff. And so, you can't post a loss. I mean, as much as like, yeah, people will say that they really enjoyed posting the losses, it's the biggest lessons. Let's be honest. No one wants to post that stuff and they're going to hide a lot of that, right? And because they don't want to do it because it's not going to look good. If you post a loss or you post a bunch of losses, right? Or you go through a period of time where you're trying to figure things out or you can't get a handle on what's going on, right? And this environment is, I think, pretty tough. I mean, some are doing very well. Some are struggling massively, and most have left already at this point in time from the COVID time. So when you get to this period, and all you see is just green and green, wins. It's not realistic. It's just not. I mean, there's great traders out there, but everyone has losses. Everyone has red days, right? But when I see some people, there's some that come to mind that I'm like, I have not seen a red day from this person in like months. I'm like, I don't know. Maybe they're that good, but at the same time, like all I've seen is screenshots from you. I haven't ever seen you log into the account live. Like, so I don't know. I mean, maybe this person's really that good, but they're also, guess what? They're also selling you their Discord below. It's like, there's incentive. There's so much more incentive to not show the losses, to not log into the account live, just to take the screenshot of only the green trades for today and then to talk about them or, to kind of go over, so I hope that people see that value there. And I don't do that stuff. Like, we talk about everything and we log into the accounts every Saturday live. So I don't know. That's my take on it all. But, Dave B, how about Google earnings reading on Zero Hedge? We talked about it, a while back. At this point, we're just kind of looking at other stuff for tomorrow. See you later. As if it's, okay. Go read it on Zero Hedge. You should get a Tesla. Maybe, I don't know. I feel like at this point in time, I just probably want to get a lease of something, at least something cheap, and that's it. When it comes to getting something used, I'm probably gonna get something used. I guess. No, you wouldn't lease. I would probably lease something new, and if I'm gonna get something, it's gonna be something pretty cheap, used. But we'll see what the market looks like, in a few months. When I need to get one at some point. This winter is the time frame. I'm moving and stuff, so we'll see. Yeah, Google hasn't moved much. I mean, Google's sitting here down 6%. It's pretty much, actually, it's kind of looking like it wants a bear flag to the downside. Let me get rid of this volume so you can see it. It's kind of looking like a bear flag. So what this tells me is, it wants to go lower if this bear flag is going to pan out. So you're in this consolidation, lower highs, ideally under this like 98.50, you're going to probably dump. and maybe go for a new low if that 98.50 breaks, if that happens. Shares on Friday just for $4 to $5 doesn't Yeah, the weather. The funny thing about the weather is that like I never actually wanted to be on TV, and so I went into it being like, oh yeah, I more like the behind the scenes and stuff like that. And then I realized, well, the behind the scenes guy is the coding guy behind the screen, and it's like, well, I hate coding. I think I talked about this before. I had an internship back in the day, well, a couple of years ago, I guess. Really look back, it wasn't that long ago. And it was a coding job for like 12 weeks, and they paid pretty well. I mean, they paid for my housing. They paid for like, I think it was like essentially it was like a $65K a year equivalent salary, like just paid like whatever, no benefits, but it was just, and they pay like $1,000 a month or $1,200 a month for housing. So it was pretty cool. But, the job was literally every day coming in and 8 hours a day coding. And I was like, I wanted to rip my eyes out. And I was like, I had to move for the summer to like do it. It was really cool, but I like actually wanted to rip my eyes out. It was like horrible. I was like, well, this is not happening. No, I'm not going to do that. I went to Penn State for meteorology. So yeah, I mean, one of the better schools, I guess, for meteorology. Yeah. Positive vorticity advection, dude. Oh my God. I mean, the freaking thermodynamics class is nuts. That stuff was horrible. We'll see. Unfortunate trading world, lost scammers. Yeah, that's what it is. More transparency in the space. And the thing is, people will hide and cover for the transparency by saying, let's be transparent, I'll show you the loss today. Like, that's how they'll cover for it. Meanwhile, they're not actually showing you their account. They're just showing you the loss today and then saying, oh, just queries down below. Like, I mean, that's just what it is. And I don't know. Stock Mo has entered the chat. I actually don't really even, I have probably watched like maybe a handful of Stock Mo videos, but even that was like maybe a year, 2 years ago, like a long time ago. I don't even know what he does. I didn't even know he was still around. Like, honestly, I have no idea. But, and he's more of an investor, right? Anyway, so I've had red years, but buy my Discord to see how to lose money. Yeah, not exactly. And I think really good people aren't going to be wasting their time. No, and that's the thing, at the end of the day, if you're, the reality is that the true pros, right, have, you can learn whatever, but the signal guys aren't interested in trying to alert signals for people to follow because it takes away from their actual trading. Like, they're doing that to try to help, but also make money to afford their lifestyle. Like, essentially what they're doing. Like, that's how that's kind of going. And if they make money in the process and trades and it looks good and they have a couple wins, like, oh, cool, even better, right? We'll see. Look forward to seeing the next 20 years. No, that's the reality is like, I'm not sitting here as like tomorrow I need to be a millionaire, right? Or I need to make $1 million tomorrow. Like, I don't care. I don't care about what happens tomorrow. It's a long game. And look, we've seen, you can go on runs in a couple of months. You can turn things around. You need to believe in at least one mentor. Hard to find, but if you're pursuing, you find a good one. Yeah, no, I don't think that the mentor side of things is a bad thing. It's really good. But the problem is that people will jump from person to person to strategy to strategy. And then it's like, is that going to be helpful? Microsoft earnings call. It's not the plan. We've gone longer than I thought we were going to go. We generally just, we've look at the earnings and kind of look at the reactions off of that. But Google has announced prolonged support till 86. That chart doesn't look great underneath here on Google. Well, I'm trying to hold that 98 now. You zoom out. I mean, you filled this gap right here back from February of 21, but you don't have much volume at least until down to like 89, 88. That's going to be your next really interesting spot. Below that, there's some spots, but 88, if the market wants to go to new lows, you're probably going to be looking at Google down around 89, right? especially off the back of this earnings. If this earnings is the beginning of the next leg down, let's just say, and this was the rally that we just had, and we head down lower in the near term, then that's where you're probably looking to target on Google. Which, by the way, you got a pretty good relief bounce. Like, you got a pretty good pop into an area that was a prior support, now turn resistance, 50 moving average. Like, it's not a bad, re-short especially in a bear market, right? So we'll see if that ends up. Well, for now, that area is going to be holding as resistance on Google, which the market's trying to come back a little bit. Let's jump back to looking at the S&P futures. They're coming back a little bit. They're bouncing a little bit, kind of just undercut this afternoon's lows and have bounced. So it's really, market, to be honest, isn't caring that much. Like, it's not that bad from the market's reaction across all this stuff. Pussy and the mother girls. Yeah. To be honest, at the end of the day, my experience there is like, there were some people, I don't want to say normal, but most people in the weather, at least in meteorology and stuff, are, you got to be kind of nerdy. You kind of got to like the science and the math and stuff. And it doesn't mean that you have to be like a complete nerd, but you kind of are. It's generally predominantly a male space, although I think there were a lot more girls when I was going to school, but it's at least it predominantly had been a male dominant industry. But yeah, to be honest, like, my experience wasn't bad. It was just like the stuff that I got into and like had to take to pass. Like, it was not fun. It was not easy. So they're like sophomore and junior year in there. The two kind of grinds. Prior to that, it was like freshman year, ups and downs. Senior year, you kind of can cut back on classes, or you kind of had a better feel for how to handle it. But sophomore, junior year were like just freaking, like, you go into a hole for the whole semester, and then you come out, and then you're like, sun's out, like, holy shit, like, that's how it felt. Literally. So, all right. With that said, I'm going to wrap things up. I appreciate you guys for tuning on in, like always, to the streams. We will do another one tomorrow, like usual. And then Thursday is the big one. And then we'll do it Friday. So we'll just stream every day this week. That's the plan because of earnings and all that stuff. So there it is. Best adult dating site. Let's get this out of here. Of course, these comments, man. I try to delete them and I try to spam them, but whatever. With that said, so far, the reaction-wise across the market, not that bad. Google down, Microsoft down off of the earnings, which Microsoft technically beat. Google did not. Google missed pretty decently. So Google's down about 5.5%, 6%. Microsoft is down about 1.8. Microsoft is rallying back. Wouldn't be surprised if that does rally back, especially after if the earnings call is positive. And you're getting some decent rally back on futures. So they're coming back a little bit. We'll see if that holds up overnight. But we shall see. Tomorrow looks like it's going to open red unless we get some comebacks, but we shall see. I appreciate you guys like always, and I will see you in the next one. Peace out.